Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be talking about why I believe the smart money is starting to get into the cryptocurrency space and will continue to be getting into the cryptocurrency space coming over the next couple of months. If you guys have watched videos on the channel recently, you'll probably know that I believe we have now entered what is known as the accumulation phase at the end of a bear market, which is typically the period of a market that separates the end of a bear market and the beginning of a bull market, which means that over the next couple of months, over the next 3 to 5 months or so, I do believe Bitcoin will be confirming a new Bitcoin bull run. And what that means is that right now is a great time to be investing in Bitcoin, at least in my humble opinion. And I do believe that a lot of other people agree with me and that we're going to see a lot more money start to flow back into Bitcoin and the cryptocurrency market coming here over the next couple of months. We're going to be talking about that in today's video, and we're also, for once on the channel, going to be talking about the stock market. I've heard a lot of you guys ask for me to cover the stock market, and today we're going to be talking a little bit about the S&P 500, the Dow Jones Industrial Average, the Dow Jones Transport Index, and we're also going to be talking about gold and comparing all of these to the Bitcoin market to try to get an idea of where the Bitcoin market is going to be going here over the next couple of months. So without much further ado, let's go ahead and get right into it. The first thing that we want to discuss is, of course, establish our foundation for our argument here, and the first thing that we have to talk about, of course, is we have to go ahead and rehash what I've talked about in many other videos, and that is that Bitcoin's bear market, in my opinion, is mostly over. I believe the bear market, in hindsight, is very easy to call where a bear market started, and in hindsight, it's very easy to say that this one started right over here about December the 17th when Bitcoin hit $20,000 right up here. And from there, Bitcoin had been in a bear market up until right about that point right there. I believe all of that constitutes the Bitcoin bear market, and then right over here, about 45 days ago or so, Bitcoin right around here entered what is known as the accumulation phase at the end of a bear market, in between a bear market and a bull market. The bear market is over. I made a video yesterday on why I believe the bear market is over. You can watch that video linked in the top right if you're not watching during the premiere. So we're going to go ahead and run with the assumption that the bear market is over for what we're going to be discussing in today's video, and that we are in an accumulation phase. Now, let's go ahead and look at this chart. Now, if you watched yesterday's video, it's linked in the top right, of course, you'll probably know that I'm not, well, actually it wasn't yesterday's video, it was the video before that, so that video will be linked in the top right. You'll probably know that I have my fair share of problems with this chart, and I do see a lot of people using this word capitulation too much, and in my opinion, we've already seen capitulation for Bitcoin, etc., etc., etc. My point is, I do have qualms with this chart, but this chart does show, and it does illustrate some very good points in market cycles, and one thing that you normally see here is, like I've said before, a bull market ends in a roar, and a bear market ends in a whimper, and this is shown pretty well over here. We see delusion, greed, new paradigm, the kind of words that describe the end of a bull market, like we saw over here in 2018, at the very end of 2017, excuse me, when Bitcoin ran to $20,000. And then at the end of a bear market, you see despair, capitulation, those kind of words, fear come into the market. And typically you see a bull market end in a roar and a bear market end in a whimper. And that shows up in the volatility. The end of a bull market is normally very highly volatile, and then normally the end of a bear market sees very low volatility, and the market drops off in the percentage gains and losses that you see come into the market. For example, this was a 100% run. This over here was about a 20% run, and lately Bitcoin has been trading purely sideways. So Bitcoin basically is out of its bear market. But the main point I want to bring up with this market, with this chart, excuse me, is that after the bear market over here, you can see that this market basically kind of repeats. You could mirror this where this loops right back around over to here, and then you see the new bull market. So what I think is that despair has already come. I've seen a lot of despair in this market, guys. I do crypto videos every single day. I read every single comment, and I saw the most despair right over here and right over here. Most of it's kind of left. All the people that were despairing over the crypto market seem to have gone ahead and already left the space. It seems that a lot of the weak hands are already gone, and the people here are, like I said in the previous video, those with balls of steel and massive cojones who really don't want to leave Bitcoin and are going to stick through just about anything. So I do believe the bear market is over, and we're now entering what is known as the stealth phase, or at least that's what's called on this chart, where we see valuation is very low, but we're actually at the beginning of a bull market. And as you can see, it uses this word smart money here. And I think that's where we are. I think we are seeing a lot of smart money, or not necessarily yet we're seeing a lot of smart money, but we're going to start seeing a lot of smart money pour into the market. You see this show up in the fundamentals. You see Fidelity stepping into the space. You see the Intercontinental Exchange launching Bakkt on December the 12th, I believe it is. We see a lot of these institutions. Of course, we see institutional investors and smart money are differentiated in this chart. I would beg to differ, but overall, institutional investors are normally part of the smart money pool, and I see a lot of them starting to step into the space right now, as Bitcoin is very, very lowly valued against its all-time high, and also against its underlying intrinsic value, which I believe is much, much higher than Bitcoin at this point. So what does all that mean? Well, basically what all that means is that we're in an accumulation phase, and now's the time to be buying into your long-term investing portfolio. Now, I want to make one thing very clear for morality and for legal reasons. I'm not telling you to buy Bitcoin right now. I never tell anyone, even if they explicitly ask me, whether or not you should buy or sell a certain cryptocurrency or anything. I'm not a financial advisor. This is not financial advice. I have to make that clear, but I am personally buying Bitcoin at this time, and I do personally believe it's a very, very good time to be buying Bitcoin. Because of that, well, actually, not because of that. That is because of the fact that I believe this accumulation phase is going to last a little bit longer. We're never going to go below $6,000 again. At least I don't think it's most likely that we will, and that I think a new bull market will be starting in the next couple of months. In my opinion, I think now's the time to be getting into the cryptocurrency space, as a lot of the bearish action has left the market. Now, does that mean just go ahead and buy Bitcoin and hold on to it and not do anything? Of course not, guys. You want to use proper stop losses, for example. It would be a great idea to have a stop loss down here below $6,000 in case Bitcoin breaks $6,000. We'll probably go straight to 5. Don't think that's what's most likely, of course, but you want to cover yourself with stop losses. But I do think now is a great time to be getting in for a long-term investment. And I want to make this very clear, because sometimes people hear me say long-term and they think, oh, well, the market crashed in an hour after the video went up, Jeb. You were wrong. Long-term means over a year. Long-term means 2, 5, 10 years plus. I'm not talking about for the next week. I don't care what the market does for the next week. That doesn't invalidate what I just said. I'm talking about the long-term here. I think for the long-term, this is a great time to be getting into Bitcoin and the cryptocurrency markets. And another reason I believe that ties into the next topic of today's video, that being the stock market. Now, like I said, I've had a lot of people asking me to talk about the stock markets, and I'll be the first to admit I mostly work in cryptocurrency markets, so this is not exactly my forte, so I do want to go ahead and make that clear. But from what I can tell with the stock markets, this is what I'm going to be talking about here, and I do see what I'm about to say corroborated by a lot of other people that are much more into the stock market, so I'm not just pulling this out of you-know-where. So let's go ahead and talk about this. As we can see on the S&P 500, and if you guys aren't in the stock market, the S&P 500 is essentially one of the largest indexes in the stock market, and it's a very good way of telling the direction of the entire market. It covers the 500 largest companies listed on the stock market in America. It's a very big deal, and we also see another example being the DIA, which is the Dow Jones Industrial Average. You guys have probably heard that before. And as you can see, both of these charts have lost quite a bit of valuation here over the last couple of days, over the last couple of weeks, in fact. And there was actually a meme that was posted in the Discord server. I forget who posted it. I'm going to go over and see if I can find it. It said, whenever people leave the cryptocurrency space to go to the stock market for volatility, that's how you know something bad is happening in the stock market. And that's kind of a funny meme, because that's exactly what's happening right now. Bitcoin is trading sideways, and the stock market is the market that's being highly volatile. But that volatility isn't exactly great for the U.S. stock market, because what we see is the Dow Jones Industrial Average is losing a lot of valuation. So too is the S&P 500. And if we bring up the 200 exponential daily moving average, we actually see something interesting has happened here. This is not really a good thing. This is not what you want to see, because the 200 daily exponential moving average on the S&P 500 and on the Dow Jones Industrial Average, and I'm tying this back into Bitcoin. I'm having to lay my foundation here. This is not really what you want to see on the Dow Jones Industrial Average and the S&P 500. These markets, these indexes, have broken through the 200 daily exponential moving average. Let me show you the last time that happened. The last time that happened, it wasn't so severe. It happened back over here at the end of 2015, and we saw a couple of little dips below it. That's this that's this bottom line right here. That's the line we're looking at, the exponential moving average we're looking at. We saw the market dip below it a couple of times, and then a couple of years ago, we kicked off a new bull market, or you could also say we continued the bull market starting in early 2016, and the market went to new all-time highs. But if you look back to the last time before that we really went below this, we saw one right over here in 2011 when we were still trying to recover from the Great Recession. But we also saw something interesting back over here in 2008. That was kind of an early warning sign that the 2008 global economic collapse was coming. We saw the entire market go below this, and that was one of the last times that we saw that. So what I'm saying, I'm not calling for a massive Great Recession. I'm not calling for a recession like I see a lot of people calling for right now, but it does seem that we're going to see some kind of prolonged downturn in the stock market that may last the next 6 months to a year or so. And an interesting thing happens when the stock market declines. Precious metal markets go up. As you can see here, if you're on TradingView, there's something you can do here. Let's go out here to the weekly chart. There's something you can do on TradingView. You can click this compare button, and you can type in another market and compare that market to this. So what I've done is I'm comparing GLD, one of the largest gold ETFs in the precious metal markets right now, to the S&P 500. And what you can see is that whenever the S&P 500 is doing poorly, typically that correlates with GLD, a precious metal, gold, doing quite well. And whenever the S&P 500 is doing very well, typically the gold market isn't doing very well. As you can see right over here, if you remember back to 2009, 2010, 2011, you probably saw a lot of television ads telling you to buy gold bullion. And the reason for that was because gold was on a massive bull run. We could see gold was going up and up and up. And this represents the gold chart right here, overlaid on top of the S&P 500. And GLD was doing extremely well when the S&P 500 was not only declining, but when it was also rallying. Especially when the S&P 500 was starting to recover, GLD was doing very well. So what does that mean? Well, that's interesting because what you see a lot of times when traditional stock markets aren't doing very well is you see a lot of their valuation move into precious metal markets because they're perceived as a less risky investment. They're perceived as a hedge against stock markets. And that's where we're bringing this, because an interesting thing is probably going to happen if we do enter a global recession. I think a lot of the valuation in the stock market is actually going to be moving into Bitcoin. And I think that correlates perfectly, and I think that has perfect timing with Bitcoin, because I believe Bitcoin is going to be entering a new bull market over the next 6 months or so. I think that's going to be very interesting timing, because if we enter a recession, like I said, I think a lot of that valuation is going to be moving into Bitcoin. Tell me what you think about that, because I think basically what you see on Wall Street and in traditional finance is that people are going to go where the money is. And I think Bitcoin is going to be starting a new bull market over the next 6 months, and it looks like the stock market isn't going to be doing very well over the next 6 months, which is a very, very handy correlation for us, because if people see that you can make a lot more money in Bitcoin, and that Bitcoin did survive the 2018 bear market, which I think it survived perfectly, I think a lot of that valuation is going to be leaving the stock market and moving into Bitcoin, which will end up bolstering the next Bitcoin bull run, which is why I say a lot of the smart money, I think, is going to be entering Bitcoin here coming over the next couple of months, because they're going to see the writing on the wall with the S&P 500, with the Dow Jones Industrial Average, and another index I'm about to show you, and move a lot of their valuation into what they perceive as a hedge against traditional stock markets, that being the Bitcoin and the cryptocurrency markets, which could not be more perfect timing. Tell me what you think about that in the comments section down below, but we have one more thing that we want to talk about. There is the Dow Jones Transport Index, the DJT, that we want to look at. And a lot of times what you see is the Dow Jones Transport Average is actually kind of an early warning sign for the rest of the cryptocurrency market, for the rest of the stock market. And basically what this is, as opposed to the S&P 500, which I believe covers basically every single company listed on that exchange, you basically see with the Dow Jones Transport Average that this covers, I believe it's the top 100 transport companies in the market. And what you see here is very, very interesting. Over the last couple of weeks, over the last 2 months or so, this average has been doing very, very poorly. The DJT has not been doing very well. As you can see, it's lost a lot of valuation here. It's lost quite a lot of valuation, and we've seen that happen a couple of other times. But what you see a lot of times in the DJT and in transport stocks is that they're an early warning sign. They're kind of a canary in the coal mine for the rest of the stock market. And a big fundamental reason for that, in my opinion, is that if transport isn't doing very well, then that kind of affects literally every single other market that there is, because just about everything, unless it's on the internet, is directly affected by the cost of shipping. So you see these markets, when they're not doing very well, a lot of times they can lead to things not doing very well on the S&P 500, for example. As you can see, this market started not doing very well about 4 weeks ago, but if we look on the DJT, we can see that things that started not doing very well started going down about 6 weeks ago. Tell me in the comment section down below what you think about that. Like I said, guys, I am by no means a massive stock guru. I mainly operate in cryptocurrency markets. I prefer them because there's honestly a lot more money to be made, and I prefer to be on the cutting edge. But tell me in the comment section down below what you think of this analysis. I do believe a lot of the valuation from the stock markets is going to be leaving the stock markets and moving into things like precious metal markets, and also in our interest into Bitcoin and the rest of the cryptocurrency markets. As we see a new Bitcoin bull market form here in the early part of 2019, we're going to see the stock market perhaps not do very well, and I think that's going to be very, very good for Bitcoin and the cryptocurrency revolution. Tell me in the comment section down below. I've told you like 7 times to tell me in the comment section down below. I'm going to tell you a 7th time. Tell me in the comment section down below what you think of that TA, guys. If you want me to cover the stock markets more, I'll definitely do that. Tell me in the comment section down below for the 8th time if you want me to cover the stock markets more, and I can definitely do that if you guys are interested in it. Anyway, I do want to cover, I forgot to cover at the beginning of this video, I do want to cover at the end of this video why the video is up so late today. That would be because my Blue Yeti messed up. You can see me. That's me clicking and touching the microphone right now. I don't know exactly what happened to that microphone. I've spent the last 3 hours since I recorded this video trying to figure out what it was. I ended up taking the microphone apart and fixing it myself. But anyway, it's fixed now, so hopefully that's not going to be an issue anymore. Anyway, guys, that's going to do it for this video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.